Okay, good morning, everyone, and welcome to the 8th Annual Laurentian Bank Securities Institutional Investor Conference. My name is Nick Agostino, Head of Research and the Diversified Technology Analyst here at Laurentian Bank. Also on the line is my associate, Salman Rana, who will be helping me in the background to moderate today's fireside discussion. Before we begin, some housekeeping items. Please ensure your microphone is on mute and your camera is turned off during the presentation. Please ensure your name appears on the screen so we can properly address any questions you may have. Also, we will pause during the course of today's chat to take any questions. Feel free to use either the chat box or just use the raise your hand feature, and we'll call on you when we're ready to take that question. And just remember to lower your hand once you're done so we know that your question's been answered. And if you have any technical issues during this conversation, please communicate so in the chat box, and we'll try to tackle as best we can. Finally, we've also added a little guide in the bottom right-hand corner of your screen that's labeled SIS for Savaria. So feel free to access that to help navigate you through today's discussion. With that, we'll get started. So join us today on this fireside chat. We've got Savaria, and from the company, we've got Sebastien Bourassa, who's their VP of Operations and Integration. We've got Stephen Reitknecht, and I apologize if I didn't say that correctly, but he's the CFO. And we've also got Nick Rimbert, who's the VP of Corporate Development. So with that, we'll get into the first question, and we'll discuss your accessibility business, given that it's the largest revenue driver at the moment. So when I look at your commercial elevator market, it was a strong driver of revenue, I believe, in Q2 of last year. At the beginning of the pandemic, looks like it tailed off towards the second half of the year as residential elevators became more of a driver. Can you talk to us about where your commercial elevator business is today? Also, in that same conversation, address your platform business as it relates to the fact that a lot of these commercial buildings in downtown cores have been shut down during the course of the pandemic. So what kind of demand are you seeing on the whole commercial side, elevators, platforms, and how do you guys see the market going forward? Should we move into more of a hybrid working model where people are stay at home and in the office on a more sporadic basis?
Okay, well, first, Nick, thank you very much for the invitation. We're always happy to participate in your conference. So definitely the residential in 2020 and the beginning of 2021 has been much stronger on the residential side, mainly with the view lift to start, with the other type of home elevators. Stair lift has been strong for Savaria, and now I think with Handicare, we have just accelerator position in stair lift. So definitely, and it's a faster turnaround. But commercial, you can imagine the small store, the restaurant, maybe not the best time, okay, of the last 10 years to make an investment. I think some pushback, the project are definitely pushed back. Where it's much more comfortable than it was 1 year ago, because last March, April, May, people didn't know what to expect. And now I think people are more comfortable to receive us to do some surveys, some maintenance. There's some small commercial project going on, but definitely the US with all the vaccination, the economy, which is good, I think it will open a little bit faster in the US than maybe in Canada on the commercial side. But still, there's some project happening, maybe not as much as it was a few years ago, but it's just a question of time, because if you delay some investment, at one point you need to do it. If you make a renovation, you open a new store, a new construction, still there's some ADA rules to respect. You have no choice to make sure it is accessible. So it's just not that the rules are changing, it's just there's maybe a small pause. But definitely residential is quite strong.
Okay, and then when we look at your elevator portfolio in general, clearly you've made a lot of investment, both from internally and acquisition-wise, for the residential market. ViewLift is another example. Maybe talk to us about your overall elevator portfolio when it comes to product gaps on the residential side, but more importantly on the commercial side. When I look at what you guys have on the commercial side, I believe you can do somewhere around 3 to 4 stories, maybe 5 6 if you stretch it. Do you see a gap in the marketplace when you look at the larger players like Thyssen Group and Otis in terms of where their portfolio sits? Do you see a gap on the commercial side where you might want to fill that gap with an acquisition again on the elevator side?
So I think definitely the big five company, the big elevator company, they are good at high-rise building. Us, Savaria, we're more specialized in small elevator, commercially 2 to 3 floor. When it is residential, we go up to 6 floor. So I think maybe what is a bit missing in our product mix is a CE product that we can go to Europe, because now with Handicare, with Garaventa, we want to bring this one-stop shop over there. And that's on our, last year we brought a view lift to Europe. And this year on our agenda, we want to bring the other home elevator and vertical platform, that next year we can get more cross-selling on the home elevator and commercial low-rise platform. Are we going to go in the high-rise building? Maybe one of those days, but right now our priority is really on integration and to bring your product to Europe.
Okay, and going high-rise, we look at the larger players, and as you pointed out, they're more equipped for 30 floors and above. It looks like there is a gap in the market in that 6 to 30 range, at least from our analysis. Is that a market that you will, I think you kind of alluded to, you might entertain down the road? And if so, would you do it through an internal product design, taking the infrastructure, the products you have today, and trying to engineer them to higher floors? Or is it a market that you think is best tackled through M&A?
Well, maybe Nick, you want to go since it's more M&A?
Yeah, I would say that we don't want to get away from our focus as being kind of, as Sebastien mentioned, more residential focused or kind of low-rise commercial focused. We have, and maybe it's in the context of a conference or on an investor call, we have mentioned, when people talk about, gaps in our portfolio, a low-rise passenger elevator, like a 2,500-pound passenger elevator, that is something that has come up. We do have certain dealers who are in that space. Again, what we don't want to do is compete against the Otises and the the Schindlers of the world. But yes, that is something that has come up in the past, as a low-rise passenger elevator, custom passenger elevators, where the big boys don't necessarily play. But I would say, given our acquisition of Handicare, I think there's a lot for us to do on the residential side and accessibility. So, where our focus will likely be, to push where we can get more synergies through our and Handicare's networks. And so that probably would be geared towards more the legacy business that from Savaria, as opposed to kind of going further into the commercial side of things.
Okay, well, that's a good response. So looking at the residential side and the elevators, I believe most of your wins come as a result of new construction, so getting engineered from the ground floor as opposed to retrofit. When you guys look at where you're getting what customers, obviously the higher end homes would make a lot of sense, but when you maybe break it down for us within Canada, certainly in Toronto, where housing prices are through the roof, and maybe within the US, what is that minimum house value threshold that you guys are getting designed into, or that are doing retrofits and installing an elevator into?
I think there's no minimum, Nick, okay, but definitely when a house is over $500,000, there's much more interest maybe to put an elevator, because at one point you can get a home elevator installed between $25,000 to $35,000. But maybe my best example is we have put a view lift at 50 to 75,000 US in a $250,000 home in the US. So it's not always about the value of the home, but definitely, like if you're going to market like in Toronto, where the medium price is 1 million, you want to put a 30,000 elevator. That's not really a big expense. It's more like an investment, because now you make your home accessible on 3 to 4 floors. So I think and definitely the architect, the contractor, they are pushing much more elevator than they were doing 10 years ago. And we see it like when we go to Baltimore or Toronto, we get some multi-unit project of like 10, 15, 30 townhouse, and they put an elevator in every single home. And I think we have a lot of success story. Even I think one of our best one is in Denver. The guy built like a 10 townhouse. He bought 5 view lift to put in his first 5, and finally he sold his five townhouse with view lift first, and then he bought another 5 afterwards. So definitely to make it accessible is pretty trendy right now.
Okay, and then maybe tackling the or looking at the Handicare acquisition. What how do you guys, taking your ViewLift product and taking Handicare, how do you guys plan to tackle maybe integrating that product into the sales and distribution footprint that Handicare has that they bring to the table today? So how do you do that integration for them to leverage them to sell your ViewLift in Europe? And then I believe you've stated in the past that you plan to sell 600 ViewLifts by 2023, and it sounded like on your last conference call you're on a nice pace to reach that target. Question is, with Handicare now part of the Savaria fold, do you think you can accelerate that target?
Well, good question. So definitely what's interesting in Europe with the Handicare, they are a direct presence in UK and Netherlands. So definitely we have all the infrastructure to be successful to sell some ViewLift. The rest of their business model is through dealer. Definitely now we have trainer staff in Europe on the ViewLift with Garaventa, with Handicare we're starting, and there's a good traction. There's an interest. It's a unique product. When you think about octagonal elevator, there's only one company in the world, that's Savaria, who does that. So now with the mini ViewLift, we can go in smaller footprints. So for Europe, it is important. ViewLift is C compliant since last year. So definitely we're doing some marketing effort, and we are starting to get some interesting leads to generate this growth. But ViewLift takes time. When you go to a retrofit market, it's maybe a 3 to 6 months period before they can purchase or install a unit. When it's a new construction, it may be a 1 to 2 years project, because at the end we install the ViewLift only at the end. For sure, at the beginning, we're going to try to link the customer maybe with a deposit and the drawings. But once the architect has put a ViewLift in the model of his house, there's a very good chance it will end up with the sales, but it's a long cycle. Internationally, there's some dealer of Handicare that say, hey, I would like to have maybe access to the portfolio of Savaria. So definitely, we have opened some new dealers since the beginning, but it's just like 1 month so far, so it's a bit early to judge the results. And when we did our due diligence, we have make a survey with some of the dealer to see what kind of product do they sell, do they have interest to be home elevator dealer, incline platform, and Handicare right now, they just sell a stair lift and patient lift, and definitely we have the interest to become a one-stop shop in Europe, a bit like we do right now in North America with Savaria. So are we going to accentuate the 600 ViewLift from 2023 to earlier? I think it's a bit soon to say, but definitely Handicare is going to participate in this success.
Okay, and then you said nice word there, the one-stop shop. And when you acquired Garaventa, I think the question was asked around what would you do from a branding perspective, as far as when you acquired Garaventa, you said you would keep branding the Garaventa products separately from Savaria. Now you've acquired Handicare products as well. The question is, are there plans down the road, maybe it's a 5-year plan, maybe sooner, to integrate everything to the point where it's a single brand all under the Savaria? Or do you guys at this stage and even longer term plan to operate the company under 3 sizable and distinct brands?
I think what's interesting now, Nick, we know we have just paid 500 million for the brand of Handicare, so I think we have to keep it for a very long time. And but we have 4 strong brands. Savaria, of course. Now Handicare, we have Span, and we have Garaventa. So it's a very nice opportunity to see how we want to position the company. Like if we go in Switzerland, the Garaventa brand is very well known. So it's become a very key to keep the brand over there. But when we go to UK, Handicare for sure is the brand, Netherlands. And then when we go to North America, for sure Savaria is strong, but stair lift wise, Handicare, they are well known, and they generate some leads. So I think we have to kind of wait and see. It's a bit soon, but it's good. It give a lot of opportunity to leverage on the brand. It was maybe more important for Garaventa and Savaria because it was similar portfolio of product in North America. We have to make sure that our dealer can compete together. On the stairlift side, that was the weakest segment, so there's not much conflict of potential dealer, but definitely for 500 million, I think we'll keep the brand.
Sorry, that's keep it permanently or keep it for now?
I think we have to be discussed 5 years later.
Fair enough. So looking at the home side of your business, when it comes to accessibility, obviously there are opportunities for government tax credits that or reimbursements that your clients can get. Is this an area that, I'm not sure if you're doing this today or maybe you might pursue to do down the road, where you can get involved in either purchaser assistance or assistance as far as helping your customers, be it the elderly, with getting those tax credits and even promoting the fact that there are credits out there?
Nick, you want to go on this one?
Sure. I mean, for starters, there's not going to be much tax credit to put a view lift in your house, right? So, I mean, I think we have to make sure that when we're talking about accessibility products, it's not going to be all accessibility products, especially an elevator.
Right.
Now, there are certain areas, for example, stair lifts, where yes, there are some, whether it be through certain, workplace safety, like insurance, monies that can be available. There's certain charities that can be available. So we work with those as well, especially on the vehicle side. We're much more active, I would say, on the vehicle side as it relates to tax credits because there's more available for that market. So I would say, yes, there are. Are we actively looking to help them finance? We have looked at that, but that's not something that's necessarily played out. I would say most people, they either draw on whether it be a line of credit or home equity line of credit to pay for their products. So it's more of a cash business from that perspective. So there isn't much. I mean, there's certain government programs like in Quebec. I can't speak to all the provinces, but there are some provincial programs in place where there's tax credits for making homes accessible. So that's just on a personal basis, not necessarily something that we would do. We would fill out certain of the paperwork, I guess, to validate that the work has been done. Whether it be our dealer or whether it be through one of our direct stores could do that. Much like there's another tax like a Rénovaire tax credit, which you might know here in Quebec for environmentally conscious renovations that you do. So there are stuff like that are available. But I would say that it's not necessarily a major focus for us. It's not something that we're putting lots of effort into. Maybe in the future we will, but to date, we haven't really been in that financing game, I guess, for our clients.
Okay. And then last question on accessibility, looking at the reseller market, I do believe that when it comes to stair lifts, if I recall correctly, you did say that there isn't somewhat of a market for the resale of stair lifts where possible, whether it's chairs, motors. If that is the case, maybe walk us through how you can reclaim an old install, and maybe what kind of margins you realize on the resale of a stair lift, and for that matter, even a platform lift, compared to if it was a new product sale outright.
For sure, Nick, we are more manufacturers, so we are there to try to install some first-hand installation. But definitely, when we go, especially with Handicare, like in UK, in Netherlands, they have some recycling project that they would take back your units or almost help you to remove it. And then we'll have some contract with the government. We might put a second-hand unit sometimes. It's a bit hard to talk on the margins wise, okay, what's happening on the new and the old, but definitely we carry a very little inventory of second-hand stair lift. I would say more maybe some of our dealer would do it. Some dealer do some rental program, and after that they would buy some spare parts for us to refurbish the chair or buy a new track because they don't have enough track anymore. So I think that there's maybe more happening with some of our dealer, but definitely in our direct location and with our dealer, we are usually typically selling some brand new units.
Okay.
And a curved stair lift, it's pretty custom to the stairs, so maybe we can recycle the carriage and the chair, but definitely the rail is typically a one-time use.
Right. Other than the material. So switching gears to patient handling. So obviously the Handicare transaction was rather interesting to me, given the fact that they have the old Prism Medical assets as part of that acquisition. When I think about Prism Medical back in the day, especially on the European side, they were involved in institutional sales, and they were also equally involved on the residential side. Maybe talk to me about how today, if I believe all your ceiling lift sales and your focus leveraging span and down the road to Handicare is on the institutional market, but is there an opportunity down the road where you're going to use Handicare and the Prism Medical knowledge base to go after the residential market, again, ceiling lifts? And if that is the case, do you think you need to engineer a lower cost product to do that?
Well, you're absolutely correct. The old Prism Medical business, where Nick used to cover the company back in the day. So yes, there is a home care segment of their business already. It's more prominent, I would say, in the U.S. than it is here in Canada. So there is a good portion of their sales that are already through the home network. So they have various I guess which would kind of home remodification companies that are out there, some dealers. Actually, it's oftentimes it could be a same type of dealer that might sell a stair lift, could also sell a ceiling lift in the home environment. So they do have a home care network already established. For, I guess, just to back up a little bit, our ceiling lift sales as well, I guess the span Savaria ceiling lift sales, so prior to the Handicare transaction, one area that we were making some good progress in was in the home care market. We were having a bit more trouble going up against the Handicares and the Arjos and those large institutional projects. So we think about a new hospital build or renovating an entire wing of a rehab center or long-term care facility. We're having a bit more difficult in those large projects going up against some of those players, but we were actually making some good progress in the home care market. So it is a part of our business. In terms of, don't write this down, but it's probably somewhere in that 15% or so of the sales, to give you a ballpark of what our home care exposure is. And for sure, as we talk about, with the broader Savaria, this whole staying at home with Savaria, that could be very more applicable as it relates to certain of our patient handling products as well, whether it be ceiling lifts or whether it be a home care bed or a surface to go on that home care bed. So it is something that we are looking at as well, and fits with this staying at home with Savaria trend. Okay.
So the other day, I think in Texas, we saw 40,000 people at a baseball game, largest crowd since this pandemic started. With vaccinations now certainly getting lots of momentum in the UK and certainly in the US, and have you guys started to see the long-term care market open up when it comes to going in there and selling ceiling lifts? In other words, are those institutions, are they able to take their eyes and put them back on what you guys are offering, or do you feel that their focus is still very much on containing the pandemic, or are they opening up to your sales overtures?
Well, it's funny that you mentioned the Texas ball game, because Sebastien on another call this morning talked about that as well. And he had a very good, I guess Seb came with a very good analogy that the U.S. is at a kind of a point of no return here. Where you see in Canada, given the vaccine rollout has been much slower, we are kind of going back into lockdown modes, whether it be in Ontario, whether it be here in Quebec. I think in the U.S., they're past that. And given where those vaccines have kind of, they're much more advanced than where we are, I don't think there's any stopping it. Now, how that translates into our business in terms of the patient handling and going into long-term care, there's a big difference between a ball game and a healthcare facility. So those healthcare facilities, and we saw this last summer as well, whereas you did have parts of the U.S. economy opening up last summer, and we were being cautious with investors and letting them know that that's fine for the normal everyday, activities, but nursing homes, in particular, we're still very much in lockdown mode all throughout the past year. So there's, yes, we're seeing kind of that light at the end of the tunnel and things are opening up a little bit, but There's not, the full access to facilities even yet. It's a slower process. March, we can't talk too much about our Q1, but I think in March we did see some positive momentum. So I think that bodes well for us going into Q2. The one thing I would also say as it relates to Handicare in particular in their patient lift business is that one area that they've been able to continue to access is some of these large projects where they're like a new build where there aren't any patients, right? So if it's an existing facility where you do have patients, there it's much more difficult to go in and do these sorts of installations, whether it be to switch out, a whole wing of bed frames, to switch out mattresses, whether it be to installing ceiling lifts. But in these new builds, which is a specialty, I would say, to some extent of Handicare, in these new builds where there aren't any patients, those are treated more like a construction site, and so that you will have access, and they have had access to go into those sorts of projects.
Okay. Again, switching gears to the adapted vehicles market. I think last year you guys obviously that market, smaller contributor to your overall sales. I think we saw EBITDA margins as low as 0%, maybe somewhere in the 5% range. I think last year you announced a restructuring of that unit, and if I recall correctly, the aim was to get to a 10% EBITDA margin within 12 to 18 months. If I stand correct on that, just maybe give us an update where you are on achieving that target and where things stand as far as the whole restructuring today.
Yes, so I think last year we have done some restructuring on the production side in the factory. So we have unfortunately removed a few people over there. I think now what we are missing is maybe some additional sales, and I think hopefully with the economy reopening, the additional sales will come, and you should see a better results. And for sure, the car division is maybe not as core as it was in the past. Now it's getting smaller and smaller, but still we have to give some time for the business. It's not causing too much disturbance in the business, and hopefully this year you will see a small improvement in the margins on the car segment. Are we going to see a growth? I think it's too soon to say. We have really to see what will happen with the economy. But for one thing for sure, if you had a car last year, this year your car is 1 year older, at one point you will need to change your car. So I think there's no new technology to replace the van conversion. So I think we just have to be a bit patient.
Okay, and then if we bring Handicare back into this discussion, when you look at their products when it comes to adapted vehicles or vehicle accessibility group, as they call it, what sort of cross-sell benefits do you think you can generate between what they offer and what you offer, and maybe how do you put those two together from a planning perspective, given what they're doing in Europe and what you guys are doing here, essentially here in Canada at the moment? So where do the products sit? What cross-selling potential is there?
I think there's very little opportunity, Nick, because they are specialized in Norway. It's a local market. We are specialized in Canada. To ship a car from here to Norway or vice versa, I don't think it's a big option. Now, in Norway, we're a bit a different place. It's a long country. So we have a multiple garage to do some mini car conversion, to do some special vehicle adaptation. So definitely we'll be able to speak between the division to try to learn something, but we see very little synergy. And on our 12 million agenda of synergy, there was zero for the car.
But just remind me, did they bring products on that vehicle accessibility group? Did they have products that they are embedding in the vehicles that you guys don't offer today? And if that's the case, is that something that you're looking to adopt here in Canada?
Maybe one small distinction between their vehicle division and ours is that I would say they're much more diversified in the types of adaptations that they do. Whereas us, we're primarily focused on whether it be the full conversion of the vehicle, whether it be through a rear or side entry or both, or whether it be the adaptation of the vehicle. So, to bring the controls from the pedals to the steering wheel, to be able to control the vehicle if you are handicapped or without use of the legs. In Handicare's vehicle adaptations, they do the similar type of handicap accessibility that we would do, but they also are involved, for example, in ambulances. So they do various projects for ambulances. They also work with, they have something with, I guess, the police force there. So they have other types of adaptions as well. It's not strictly handicap accessible vans as you see more with us. That being said, I don't think that, again, it not being our focus, we have a lot on our plate with accessibility and with patient handling. I don't think it's really something in the near term that we're going to be looking to focus to bringing some of those innovations that they do outside of wheelchair accessibility to North America. I think for right now, we have a lot with accessibility and with patient handling. So they will likely stay remote businesses in Norway and here in Canada.
Okay. So moving to what I call the general round, so just a series of questions that we have. I recall, obviously been covering this company for quite a few years, and when we first started, there was a whole idea of the AODA, the Ontario Disability Act, which had a 2025 timeline to get all new construction, all retrofit construction to adapt to the code and make it much more easy and accessible for the mobility challenged. As we're getting closer to that 2025 timeline, what are you guys observing in Ontario as far as, do you feel that the Ontario market is accelerating because people haven't met that code yet? Maybe they're slowing down because they're ahead of the curve. Where do you see other provinces when it comes to their own ADA acts and timelines? And where do you see the US in general when it comes to the overarching ADA and what requirements they're putting on the market?
For sure, I would start, maybe Nick can complete. So basically, Toronto is our best market, Nick. We are direct in Toronto. We are strong residentially, but also commercially. So when I think you walk in different buildings, if they are accessible, there's a good chance it will be a Savaria equipment. But we don't really track, okay, when we get one order, is it coming because of this CDA rules, is it because of that? It get a bit hard to evaluate, but definitely, I think we see a lot of buildings in Toronto that are very accessible. So I believe the trend has been going in the right direction. But again, from local market, okay, may varies a little bit, but definitely accessibility is core. People know it, and a lot of jurisdiction, they have no choice to be compliant before they open the door. And it happens from time to time that we get rushed. I cannot open my building if the elevator is not working. So definitely in North America, it's very present. Nick, you want to add something?
No, I would say it's a very, very good answer. I mean, province to province and in the US, state to state, there's different rules. Yes, you have the ADA that kind of, especially in the US, that kind of sits on top of everything. I would say just overall, we are seeing a push. A lot of it where there might have been some slowdown is that, there's certain kind of buildings that are older that are grandfathered in. So it really has to do a lot with kind of new renovations that you're going to do to bring your building up to code, or new builds. And again, I don't know if it was going to come up, but in the new infrastructure package that President Biden has talked about, again, whether it passes or not is a whole different story. But there's a good chunk of that, and again, it's difficult to know exactly how it's going to be split out and apportioned. But there's $400 million that they've talked about for older Americans and disabled Americans. And so what that means in terms of new investments, time will tell. But I do think that, yes, there is more movement, more push to make buildings, whether it be churches, government buildings, transit, to make it more accessible. So that should see, continued growth over the next several years and decades. And this COVID environment that we're in now has stalled some of that. But again, that's more temporary as it relates to foot traffic more than anything.
Okay. And then looking at your, I guess, supply chain, as I like to call it, obviously you've got presence in Asia. With Handicare, you've increased your footprint within the European market and your manufacturing capacity. And then within North America, Span, Garaventa have certainly augmented that. Maybe talk to us about how Handicare, specifically on the North American side, the fact that you picked up a facility in St. Louis and another facility here in Toronto, how do you guys plan to use those facilities going forward? Do you look to maybe shut down the Toronto facility, given that it's smaller? What would you do with the St. Louis facility, given that it's closer to the U.S. West Coast and the U.S. Southwest, for that matter? Would you do more than just, I believe it's ceiling lifts today that Handicare is doing? How do you integrate that into the whole mix?
Okay. I think a big difference from Handicare acquisition to Garaventa acquisition. So if you go back when we bought Garaventa, they were losing money in China, in Italy, in Germany, in Florida, and outbreaking even in Toronto. So we had to be forced. We had no choice to make some move, and there was some easier integration. But in terms of Handicare, it's a profitable company. Each location is making money, and they are specialized in what they do. Example, in St. Louis, they are specialized to sew some sling, to manufacture some ceiling lift. And in Toronto, it's more like a distribution center for across Canada for other market. They can hit the customer the next day with deliveries. You go to UK, it's a factory. They are strong in the local market. They have no choice to manufacture in the local market to be successful. And Netherlands, they are direct as well, and they have a long history to manufacture single tube. We go to China. I had a chance to visit the factory last year before the pandemic, and basically they are specialized to make the seat, to make some of the carriage for some of the market, and now they are trying to grow the sales in Asia using a sales team and a technical team from there. So we don't have no plan to merge any of those locations, but we have some plan, example, to manufacture at our factory of Savaria in Toronto the curved stair lift that will help us to be more direct in North America. We would like eventually to manufacture the curved stair lift also in China, for that Savaria factory. So I think there's a lot of opportunity we can leverage on each other. We have a lot of opportunity on purchasing, supply chain, cross-selling, but definitely to touch the different factory, it's not on our agenda for now. Because they are operational, they are good, they're profitable, and I think we can first learn from each other and try to send some of the manufacturer to local place. Example, we want to bring view lift and home elevator in Europe, but now I have three choices. I do it in Netherlands, in Italy, or in UK. That will be more the type of decision which we make.
Okay. And then looking at integration in general, clearly especially with the Garaventa transaction, I think you guys did a good job of demonstrating to the market your ability to digest sizable deals. Now you've got Handicare on the plate, which is an even bigger transaction. What sort of things have you learned from Garaventa that'll help you ensure that you're going to deliver on time and have a smooth integration? First and foremost, is there been any setbacks and bottlenecks? I know it's only been, call it a month and a half since you closed the Handicare transaction, but anything at the onset that maybe was unexpected? And I also recall that when it came to Garaventa, if I recall, you did a little bit of a change out of management to help through the whole process. What gives you the assurance this time around that you've got good alignment with the Handicare management team to get the integration done on time, smoothly?
Okay, so I think if we go back to our old example, when we bought Span, we say, guys, here's a ceiling lift, please sell it, we'll see you each quarter. And when we bought Garaventa, there was maybe more restructuration to do. We say, hey, let's make some committee, let's meet, it used to be 2 days per month in person. What is our synergy? What is our different activity? Who will do it? When it's going to be complete? We have done that for 1.5 years, okay, 2 days per month. And today we are doing it virtually. It's half a day per month, but we are continuing. When we bought Handicare, like a month ago, we say, we are going to do the same recipe as we did with Garaventa. We have created a committee, one for the accessibility, one for the patient handling. And we say, hey, what is the activity? Who is in charge? And when it's going to be completed? And definitely, I think in the first month, okay, we had a lot of different meetings to learn more about the business, to start to identify some easy win, to start with some easy activity, to have a certain traction. Even the big project, like example, Toronto, we already made a layout. We have the equipment already purchased on the go, coming in the next few months. So definitely there's a good start of a synergy on that aspect. In terms of management team, But during the due diligence, we have discovered a bit the top management. Now we are discovering the second layer, and there's a lot of talent in this Handicare. They have been in business for many years. They are specialists in stair lift, and they are very happy to have found a Savaria family because they were owned mainly by a private equity, which the goal was to sell them at a certain point. So now they found a family with a long-term vision. They know we want to grow the business. They know we want to make acquisition. They are very happy to receive our product in Europe. They are happy that we can work with them on a stair lift in North America. And the patient handling division is very happy to have a mix with Pan America because they know that it's not a division to divest. They are there to grow the business. So I think it's a very good start. Maybe Steve, you can comment a bit on our synergy, where we are with the Lift Up program.
Sure. So the Lift Up program, for those of you that have followed some of the announcements, they implemented a Lift Up, Handicare implemented a Lift Up program, a restructuring program back in 2020. They announced it early in 2020, I believe at the end of Q1, beginning of Q2, and started to execute on that in Q2. And that was primarily around trimming a little bit of fat on the corporate side and also right-sizing the operations with regards to, there had been some divestments in the Handicare business, and there was a few facilities in North America, primarily in patient handling, supporting the patient handling business that were no longer needed for the new size of the business. So they closed a couple locations, laid off about 10% of their staff, and the annual benefits from that are 12 million Canadian. So we've seen half of that come through in 2020, and the remaining half of that's going to come through in 2021. So we saw that come through in Q3, Q4, and now we're going to continue to see that in 2021. All the plans have been executed, and there's no further action to take, no further costs need to be incurred. So it's in place.
Okay. We're getting close to the end of the session. We'll try to get one, maybe even two more questions in. Sales distribution capacity and more of a geographic footprint. Obviously, with Garaventa and Span, you've got a good presence in North America and initially into Europe. Handicare certainly supported that European footprint and expanded it sizably. When you guys look at the business, when you look at your geographic footprint, you're also in Australia. When you come back and visit, where does maybe M&A or sales distribution focus have to be to kind of round out what you're doing? Is it going to be more sales focus from a capacity perspective in Europe? Are you going to focus in the coming years on the APAC side of the market and in Asia? Segments like that. So just talk to us about your sales footprint on a geographic basis and where you have a gap.
Okay, maybe I will start and Nick will complete. So basically, for sure, North America is very important. On stair lift side, I think we can have an interesting synergy that some of the Savaria dealer could be interested. For sure, we need to understand, like when you're a stair lift company or you're maybe more a small DME store, a porch lift, this kind of low-rise product, you not maybe start to sell the view lift the next day. But so definitely North America, a lot of potential on the stair lift. If we go to Europe, the one-stop shop to bring the home elevator, the vertical platform, that could be an interesting growth. Handicare was not also selling incline platform, so that give a chance to sell the Garaventa brand within Handicare. And then we go to Asia. That's maybe an area that both companies will want to do better in the future. Australia, they are selling. We have a direct location also, so that will be interesting. That Australia, Asia can have a good future in the next 5 years. But definitely our first priority is North America and Europe, because Europe is now very important for us. I think it's close to 40% of our sales. So we have to take care of that. And we have a good opportunity because we're not a one-stop shop. Now we are becoming one. So that's an interesting for organic growth. In terms of M&A, what is the next few opportunity? Maybe Nick, you want to comment on that?
Sure. I think in terms of geography, we do have a lot on our plate between Europe, North America, and then even Australia. I'm not sure if it's going to be necessarily a focus of ours to get much outside of that. Sebastien mentioned possibly in Asia he's looking to have maybe some local production for stair lift production there. As you know, we've been in China for well over 10 years now, maybe close to 10, 12 years now. We've been in China, but only with a kind of an operational mindset, right? We go there to manufacture. We didn't necessarily get too lost in trying to be a big sales force in China. And that's something that was a bit different with Garaventa, part of that kind of mixed strategy with Garaventa, where they were kind of doing a bit of both, and it wasn't overly successful for them. I think now maybe we're at a spot where, given that we both have physical presences there, maybe it's an opportunity for us to look at more kind of Asian sales. That could be something, but I wouldn't necessarily go out there and think that we're going to be super acquisitive around the world. I think we have a lot here: North America, Europe, and Asia. It would most likely be kind of internally through what we're doing there. I can't imagine us really at this point, buying a large Chinese company or buying. I mean, I know Marcel mentioned Brazil on the investor call. I think that's more kind of a longer term strategy, just to highlight that we are now a global company, and there is possibilities, I guess, that once we've established ourselves and kind of fixed, or not fixed, but kind of focused on what we have now, that yes, there's opportunities, whether it be in Brazil, that's a large market. China, I said, is a large market, but I think that's kind of more in the longer term strategy, not necessarily in the next couple of years. We have a lot on our plate and where we are currently.
Okay, and just under 30 seconds, given the fact that with Handicare, your balance sheet is 3.6 times leveraged. When it comes to M&A, how big of a deal, if the opportunity presented itself, would you look to digest? I can assume if it's a small 3 to 5 million distributor tuck in, it's not so big of a deal, but would you look at 20, 30, 40, $50 million opportunity if it was the right one, or would you have to put that on pause given that Handicare is a lot on your plate?
Well, I'll let Steve kind of talk a bit about what my handcuffs are in terms of acquisitions.
Sure. Yeah. So I mean, we do have excess funding available to us. I mean, we raised more credit facility than what was needed just for the Handicare acquisition. So when we look at our cash and our current debt position and where we're going to be after we pay off the Handicare debt, we have in excess of 100 million available to us. So just because that's all available to us doesn't mean we're going to go and spend $100 million tomorrow. I mean, likely not. Handicare is a big acquisition for us, and our focus is on proper integration and realizing the synergies and realizing as much synergies as we possibly can. So, have we closed the door on other acquisitions? Definitely not as well. And if the right opportunity does come, then we'll look at it and potentially pull the trigger. A smaller tuck-in would probably be easier, but if something does come across our plates that is attractive, we will look at it for sure.
Okay, great. So we'll end it there. Sebastien, Stephen, Nicolas, I thank you guys for attending today. Appreciate your support. And just a reminder that we've got the supply chain panel that starts at 11 a.m. Thanks again, guys.
Thanks, Nick.